All right, some of you took this training last year. It's the same. The PA 1000 has minimal changes year to year. I don't know of any coming up this year. What we're going to do different tonight, though, is we're going to try to spend as much time as possible in Taxlayer going over some of the input challenges that we have at our site at least, and you might have also at your site. As I did last year, the source of my training are 3 documents that Pennsylvania puts out. They put out a nice little pamphlet on the PA 1000. Of course, many of our clients come walking in with this booklet. That is a fantastic source of information. And then there's a larger booklet that Pennsylvania puts out. I have the 2017 version. There's virtually no change year to year, but they publish it every year. And we always have a couple of those around the site. So those are the 3 documents I used. As I go along here, if I'm not talking loud enough, you can't hear me. If you have a question, as much as possible, we'll try to answer questions as we go. If we start to get bogged down, don't be insulted, but I'll cut it off so that we can get through all the material that I have. So PA 1000, property tax rent rebate. Who is eligible? 65 or older is the first requirement, and these are all separate individually. 50 to 64, and you are a widow or widower. You may have been remarried during the tax year. You could still be eligible, but that calculation becomes difficult and it almost becomes easier to do manually. So we're not going to dive into that tonight, but if you hear them talking that they were a widow or widower for some portion of the year, the earnings they had for that portion, the rent they paid, the property tax they paid for that portion of the year may qualify them for property tax rebate. But if they have been a widow or widower the entire year and they meet the other earnings requirements, etc., then they qualify for property tax rebate. And 18 or older and permanently disabled. I know for our site, this is the largest growing group of people that qualify for property tax rebate or rent rebate. The 18 and older who have been designated permanently disabled. The income limits for property tax rebate, the income limit is $35,000. For rent rebate, the income limit is $15,000. Pennsylvania took a court case a number of years ago because they have not changed these limits for multiple years, even though the Social Security has grown by leaps and bounds. The court case finally said if you can take your Social Security back to 2012 and it puts you under 35,000 or 15,000, then you still qualify. I have never done that calculation for anybody. I've never heard anybody in VITA who said, oh yeah, I did that calculation and I got them their $250 rebate. So I just want to make you aware of that. If you hear a client start to say, well, you know, only a little bit over, don't I qualify? Well, maybe they do. If you want to take the time to take their Social Security back to 2012, go backwards. But I always point out that even if a spouse is listed, the taxpayer is the person applying for the property tax or rent rebate. So it's like a single person application. That's how Pennsylvania tracks it under the taxpayer's Social Security number. So even though we list the spouse and we need to list the spouse's income, it's really a single person rebate. So what income is included? 50% of Social Security, 50% of state supplementary payment, or Tier 1 railroad, and SSI. The only 2 that we have to worry about putting in are SSI and state supplementary. And if they don't tell you about it and you don't put it in and it appears they qualify, the state will catch that, because the state gets the information on SSI, and of course they know what was paid out in state supplementary. So if you have a client that hasn't told you that, it's not your bad, it's their bad, and the state will correct it. And then I'll get the call in July, how come I didn't get my property tax rebate? And we'll straighten it out. So what income is included beyond that? Everything that is taxable on the federal return: wages, interest, dividends, capital gains, losses, pension, IRA, annuities, self-employment, gambling winnings, net the losses. The thing that we have to put in is if they sold their home and had a capital gain on it, Taxlayer does not transfer that over off the federal, even if you put it in on the federal, which most of the time you don't. But if they sold a home, their primary residence had a capital gain on it, we have to capture that in the PA 1000. And I'll show you how to do that later. Most of the time, that knocks them out of property tax rebate. You're usually dealing with an elderly couple that has moved into a retirement home and sold their house. They bought it in 1940 for $5,000, and they sold it for $150,000 or $200,000. And that capital gain, you can talk about the roofs they put on, the furnaces they put in, but in the end, that capital gain knocks them out of property tax rebate. And then gifts of more than $300 from non-family members. I've bumped into that one time. A lady's church gave her a large donation. She told us about it. That had to go into her rent rebate form. Insurance payouts, the values of inheritances. You'll hear a taxpayer telling you, I got an inheritance. And of course, you don't think about that doing the tax return, but then you get to the property tax rebate. And then you have to remember, oh, this taxpayer told me about an inheritance they got. That needs to go into the income bracket on the PA 1000. So if you've made it, question. Yeah, both on a husband and a spouse, or a wife and a spouse, whoever is listed first, which for us is the taxpayer in Taxlayer, that person is the person applying for the property tax or rent rebate. The income, though, because they both lived in the same house, is the two of them. It's the household income for the two of them living there. This really comes into play when one of them passes away. The widow comes in, her husband has passed away in the past year. He was always getting property tax rebate. Of course, she qualifies because she's older than 65. I always teach people, make her the taxpayer when you start the tax return. You can call the return forward from last year under the husband's Social Security number, but flip them around in the basic information before you go further, because then she will show up as the claimant for property tax rebate. Of course, now she's a first-time filer, so you got to prove her age, etc. Does all that make sense? Because that's some of the nuanced challenges that we miss if you don't think about it. So the widow comes in, her husband has just passed away, or the husband comes in, he's just become a widower. Many times the husband is listed as a taxpayer anyhow, so nothing gets changed. Many times the widow, though, has been listed as a spouse on prior year tax returns. I always say, you're going to do it next year anyhow. You might as well do it right now. Flip the two around. Okay, so we figured out the income. They're under 35,000 or under 15,000. There's a chart in the book. You look at what the property tax was they paid, or 20% of the rent they paid. And if the chart shows you a higher rebate than the rent paid, they would get that. If the rent was lower than what the chart says, they will get what the 20% of the rent was. This goofs people up when they see the printout coming out of, well, I thought it would be a $500 rebate. Well, you didn't pay, 20% of your rent was not $500, it was only $400. So your rebate now is only $400. So it's 20% of the rent paid or the full property taxes paid. It really gets into trailers with, they're an owner renter, but they're paying very low property tax, but their income is too high for rent rebate. So they have a very low property tax. They're going to get property tax rebate, but they may not get the full amount. So I find myself having to explain that to preparers and to clients of why their rebate is not exactly what the chart shows. Some clients will insist and tell you, I got more last year. You're only telling me I'm getting $500. Last year I got $650, and the year before that I got $650. There must be something wrong with your calculation. There's a supplemental payout that we cannot put into the form, but the state puts in. All you can tell them is, well, you probably will get the $650, but that is given by the state. It's not given in the way we fill the form out. We fill the form out showing you get $500, and the state decides if there's a supplemental available to pay out. Every year I've done it, there's always been that supplemental, but the year that doesn't happen, the state will have to explain it.
Some people are eligible for 975, I think, as property owners.
I'm not sure locally they are. In Philadelphia they are. It does depend where they, Philadelphia is considered a high rent district. So they give them a little more supplemental based on the income. Pittsburgh's probably another one, yep. Yeah, we're close to Philadelphia, that's why I know that one. But none of our clients live in Philadelphia, yep.
They live in tax-exempt property.
Yeah, I was going to hit that at some point, but you brought it up now. A rent rebate, the landowner must pay property tax. And you bump into that in nonprofit retirement homes that we have in Lancaster County. The retirement home itself does not pay property tax. And they know it, and they will not give the client a rent certificate. And most of them will tell you, I don't qualify for a rent rebate. But the landowner must pay property tax for the renter to qualify for a rent rebate. He's asking the question, what if they rent a room in a house? That if the landowner does not pay property tax, whoever owns that house, if they are claiming a 501c3 nonprofit and are not paying property tax, then the person living there paying rent cannot claim rent rebate. And the landowner has to, when he signs the rent certificate, he's signing that he pays property tax. So that should stop him or her at that point, not to give the client a rent certificate. All right, so we know what's included in income. We know how to calculate the property tax or rent rebate. The hardest part of doing this is, what do you put in the package to hand the client when they leave? And this is, you'll hear me say this 10 times before I'm done in the next 10 minutes. All applications, we use page 1 of the 1040 as proof of income. If you read this booklet, you would have a stack of paper that thick to go along. If you read this booklet, it says page 1 of the 1040 is all you need, or page 1 of the PA40. We have never had one rejected for not enough documentation, and the only thing we ever send is page 1 of the 1040 for proof of income. Has anybody ever looked at that any differently? Last year I got into a healthy discussion on that, but page 1 of the 1040 is all you need. The 2 pages of the PA 1000, which will print out of Taxlayer. Any schedules that you created, a rent certificate, a Schedule A, a Schedule C, a Schedule F, a Schedule B, any of those schedules that you had to create, they have to go along with the package. For property tax rebate, either a copy of the receipted tax bill, it must be receipted. We have clients that still want to come in and say, well, here was my tax bill. And I can show you in my checkbook where I paid it. That doesn't work. They have to go back and get a receipted tax bill or go to the bank and get the front and the back of that check, of that canceled check. And I tell them it's normally easier just to go get a copy of the tax bill receipted than to go to your bank and get them to print out. And I think most banks are charging for it now. Yeah, you have to pay for it. So a receipted copy of the tax bill, or if they're paying their taxes through their mortgage statement ought to show what they paid in taxes. Every now and then we'll get one where it'll show what was put into escrow, but they don't show what they paid out. The mortgage statement must show what they paid, not just what they're holding in escrow to be paid. And then for a rent rebate, a copy of the rent certificate signed by the landlord. Everything you have must have the Social Security number written at the top. So it's already on the 1040. It's already on the rent certificate. It's already on page 1 and page 2. It is not on the copy of the taxes paid that you made. So you must write the Social Security number at the top. This is how Pennsylvania tracks everything. If they get the papers all mixed up on the desk, they're looking for that Social Security number written at the top of every form. If they are a first-time filer and they're doing it because of age, they have to have a copy of the driver's license. Any first-time filer will have a copy of the driver's license, whether it's 18 and older disabled, whether it's 50 and older widow or widower, or it's 65 and older filing. All of them first time have to have a copy of their driver's license. It's the easiest way to prove age. Again, write the Social Security number at the top of that when you copy it. If they're claiming widow or widower, they need a copy of the death certificate. Write the client's Social Security number at the top of that. I never ran into that, but I wouldn't know why not, because it would still be a legitimate date of birth on that expired driver's license. Yeah.
What if they don't have any driver's license?
You can go back to another form that a government form that has it. There's a whole list of them in this book. I've never run into it that a person didn't have a driver's license, but if they absolutely say, no, I've never driven, I never had a license, I don't have a picture ID, then go to the list of forms that are a legitimate substitute. Doesn't your Medicare card have a date on it? There's a whole list of government forms that do. PaceNet cards have dates on them. And then if they're claiming disabled, the easiest thing is the letter awarding Social Security for disability as proof of disability. That's the easiest thing for the person. I have not bumped into somebody who is disabled and hasn't even applied yet to Social Security. Normally they're coming in with a Social Security statement already, and they're getting their Social Security disability. The easiest thing to prove disability is that letter. If they have been turned down by Social Security, then they don't qualify under that portion of the rent rebate, property tax rebate. If they haven't applied yet, they can take a document to the doctor to be signed for disability. But if they've applied for Social Security and been turned down, story's over. They're not disabled. They have to wait until they get that disability from Social Security. If they have never applied to Social Security, then they could go to the doctor and get him to fill out a disability letter to go with the PA 1000. When they tell them when they get that, write their Social Security number at the top, put it with all the other paper you gave them, and put it in the envelope that you've given them. The last thing is you do not staple anything together. Pennsylvania highlights that every year. Do not staple PA 1000 forms together. So you have this stack of loose paper, they want it loose. Apparently when they get it up there, they take it all apart. Now there's a question back here. Yes.
Suppose this never happened to me in Pennsylvania.
Yes, yeah, that would be legitimate. Yeah, the question was, will a disabled veteran with a letter from the veterans group saying they were disabled, that would satisfy. Yep. There. Veterans disability, I looked that up and I can't remember the answer. Does anybody know real quick what the answer is to that? I think Pennsylvania set it aside. They were putting it on up until a year or two ago, and they have set that aside at least starting last year. That's not part of income. Now, I think that used to be on. Federal veterans disability payment and state veterans payments are no longer required to be included in eligibility income. So. And a reminder, I get a call every year. Where's my rebate? Rebates, and Pennsylvania is now robo-calling everybody to tell them that they got their form, and then robo-calling them again to tell them they're getting their rebate, which creates another set of questions. But people always say, where's my rebate? I didn't get my rebate that you told me I was going to get. They don't start getting paid out until July. And I usually try to remind, if I'm doing a review on a tax return, I try to remind the taxpayer, now you won't see this until any earlier than July. Yes.
For disability, does it have to be the taxpayer himself or herself disabled, the spouse?
It's the person applying for the rebate. So if the spouse is the one that wants to apply, you're either, and you've filled out the tax return under the taxpayer, you're either going to have to do it manually or flip it around so that the disabled spouse shows up as a taxpayer. You can do a PA 1000 manually showing that person. I know what I'd do. I'd flip them around. Okay. Number of special situations, the claimant is deceased. We'll have a person come in and say their parent died. We're doing a final tax return form. They always got rent rebate. Can we do the rent rebate form? And you can, for that deceased person, I would go to the book because there's a number of extra forms you got to make sure are in there. So we're not going to teach on that tonight. A second name on the deed or on the lease. We're going to cover some situations of that tonight. The Pennsylvania Schedule F. I understand mid-year it started to work in Taxlayer last year. We were doing it manually. We're going to demonstrate that tonight when we get into Taxlayer, showing you how to fill out that Schedule F. If there's two names on the lease, or if there's two names on the deed, and the second name is not the husband or the spouse of the applicant. We're going to show you how to handle those. If they lived in two homes or they moved out of their primary home mid-year or partway through the year, you need to do a Schedule A. We have an awful lot of preparers that were going into Schedule A and putting the taxes in there, even though they had lived there all year. That's not where you put the taxes if they lived there all year. Schedule A is if you've moved out of your house partway through the year and either moved into another house or moved into an apartment or something like that, but you didn't live in your primary residence that you were paying taxes on the full year. That's when you use Schedule A. So we ready for practices? All right. Let's start with Alice. Alice owns her own home. She's not married, and she has a disabled son that lives with her. And she paid a total of $2,274 in property tax. And you'll see we got the Jones sisters here. So the son is 50 some years old, and she had interest and she had Social Security. And that's all we know about her. But we know she owned a home. So let's go over to the PA 1000 and see what we have to put in. All right, she was a resident all year. We're going to continue. We're going to go into basic information. And we're going to pick a school district. And anyone, yeah, that's a good one. And she's retired, we know that. So we're going to save that. And we're going to go down here to miscellaneous forms to find the PA 1000. There's the PA 1000. First mistake that happened all season to us, maybe it didn't to you. I filled out everything and my PA 1000 won't print out. What's wrong? You got to say yes. You can fill out the whole thing, but you have to tell Taxlayer, I want it. You know, I want this form to be printed out. So always remember to start out by saying yes. All right, general information. She's not a first-time filer, so we're going to skip over that. And she's in Lancaster County. She's a property owner. What qualifies her for the rebate? 65 and older. I found out it doesn't matter whether you know, if you're not talking the year that the spouse was deceased, it really doesn't matter whether you say yes or no. The widow will come in and say, my husband died 20 years ago. Hey, yes in there doesn't buy you anything. So you didn't hear, but I tend to skip over that. Unless it was within the year that we're talking. You're filing on behalf of the decedent? No. So we're going to save at that point. Income menu, let's go into that. All right, I've actually seen some preparers go in here and start putting income in. That was on the federal tax return. The only reason you're going into this form is if there is something that wasn't on the federal. They had an inheritance, they sold a house and you're trying to put the capital gains in. They had an insurance payout that you need to put in. That's the only time that you're going to go into this income menu. Most of the time, you're not going to touch it. And you're only going to touch it if you heard in the process of preparing the return these other things like, I got an insurance payout because my husband died or my mother died and I was a beneficiary. Or I sold my home and you figured that out already in the federal tax return and they had a $50,000 capital gain. Of course, at that point, you're done doing the property tax rebate because the income would be too high. Or the church gave me $1,000 because my income is so low. Okay, those are the things that are going to trigger you to go into that income menu. If you don't hear any of those things, don't go into that income menu. Okay, so we're going to back out of that. All right, now, she paid property tax. I said it already, I'll say it again. Don't go into Schedule A to put that property tax. Go into that box that says total amount of property tax paid on your primary residence. It's you know, you're just going to create a mistake. I think that's why so many Schedule A's printed out last year, because we opened that box up, even though we didn't put anything here, we opened it up and went back out of it, and then the Schedule A printed. So how much property tax did she pay? Okay. All right, and what does the disabled son have to do with this problem? Absolutely nothing. Okay, so don't get tripped up when you see an aged disabled son. It doesn't help or hurt you either one for property tax or rent rebate. All right, anything else we need to put in? I don't think so. So we're going to hit save. Okay, yeah, let's go to that. Yep. Yeah, we were handwriting this in and we didn't have to. Because we didn't have the direct deposit discussion until we were way too late. Till we saw what the rebate was, then we went back and, let me slow down and say this clearer. We didn't want to put that in until we knew there was a rebate. And you don't know there's a rebate until you go to the print. So if you're absolutely positive everything you've seen, there is going to be a rebate, you can put it in right now. That left us to put it in manually after the forms were printed. We had to handwrite the direct deposit information in. So if you're doing this and you're convinced at this point there is a rebate, you can ask the client for their direct deposit information. Because you haven't asked them for that yet because you haven't put it in on the federal or the state yet. See, for me, it seems all out of sequence. I'm sorry. But if you know you want to put it in, put it in. All right, so we're going to save now and we're going to get out of this, back. And we're going to exit Pennsylvania. Unless they have changed that, it did not carry over last year. Now, look at this. We got a print button now on the Pennsylvania. This is nice. This is one of the improvements that were asked for in the suggestions over the summer. So we're going to print now, and it's going to show us all the Pennsylvania forms. So there's our Pennsylvania tax return. And here's our property tax rebate. See Social Security, $10,775. It took half of it and brought it over. She had her interest and dividends, $898. For a total income of, back up here a little bit, Steve, of $62.86. So at $62.86, let's go down to the chart and say her maximum rebate is going to be $650, right? Okay, so her maximum is $650. So let's go back up here. She paid tax that was $22.74, so she gets the maximum, $650. All right. All right, now let's go back and just have some fun. You want to close that and go back into the Pennsylvania return? And go back into the PA 1000. And we're going to say she sold her house at the end of June. And she made $100,000. Well, let's not even say that. Let's say she broke even on it. We're not going to put any capital gain in at this point. But she sold the house at the end of June. So now we have to do a Schedule A. So let's go back in and find the Schedule A. All right. Do you want to complete the PA 1000 Schedule A? I love that question. Yes, that's why I'm in it. But whoever set this up, that's what you got to make sure you answer that. Won't print it, yeah. All right, we're not going to put the address in. What I want to show you, the beginning date you occupied. This is a real trick question. She moved in January of 1950. That is not the date they want. They want to know in the tax year you're talking about, when did you start to occupy it? So 99 times out of 100, you're going to say 1/1/2017. Because what Taxlayer does is they calculate the number of months that you lived in that house back to whatever date that you put in there. They divide that by the number of months in 2017 that you lived in the house, and they multiply the tax by that number. So, which gives you a totally crazy answer. So just a tip. And then the taxes, the ending date you occupied June the 30th, 2017, and the taxes you paid were what, $22.74. All right. See if it lets us out of there, or do we have to put the address in? Yeah, it left us out. Okay, let's go on out and print that. Yes, go ahead.
What's the purpose of printing it out? Is that because if you do it electronically, it costs more?
Well, the PA 1000 you can't do electronically, but you don't know if it even calculated until you look at the printout. There's no way to tell in Taxlayer whether it's calculated or not until you go look at the print. No, you're not. We're not printing it here. Yeah, so it didn't, because we didn't put a date in, I guess is there a Schedule F showing there? Or A? Yeah, there it is. Ah. See, it didn't take the month that we left. We said we left in June the 30th, 2017, and it said 12/31. No, no. Yeah, she sold the house. Now she's a renter. So it should have taken 50% of the property tax and moved that over to the page 2 of the PA 1000. But
so if she rents, then
she's a renter.
allocation of,
She's an owner renter, and they take 50% of the property tax because she only lived there half the year.
but nothing for the rent, if rent comes below.
Well, then you go, she's an owner renter, so you fill out a rent certificate, and it compares her income at 15,000 to the rent certificate, 20% of the rent certificate, and the income at 35,000 to the property tax, 50% of the property tax. So, okay, enough of that detour. Let's go to the next example. Barbara owns and lives in a mobile home. She pays lot rent. She paid tax on the mobile home of $1,095 and lot rent of $47.76. We'll go pull Barbara's up. And she had a little more different income, didn't she? And I got the one missing. Oh, there it is. Okay. Yes, Barbara had a 1099-R pension or an annuity, and she had Social Security. So we take half of the Social Security and all the pension, and that becomes her income. And she is an owner renter. So let's go over to the Pennsylvania. She's a resident. Is the speed that we're going at okay for everybody? Okay. Would you say if it wasn't? Okay. All right. Miscellaneous forms. Okay, we're back to the PA 1000. And the first thing we do is say yes. And she's not a first-time filer, so we don't have to worry about that. And she's in Lancaster County. And she is an owner renter. Now, I learned something this past year. If the person is an owner renter, you can't get away with just saying they're a renter. Let's say they're in a mobile home and they pay virtually no property tax, but they pay a lot rent. We tried one where we did not put in the property tax this past year. The state caught that. They wanted to see receipted tax certificates before they would pay out the rent rebate. The person qualified under rent rebate. They didn't, the bigger payout was under rent rebate. It wasn't under property tax. But the state knew they were paying property tax and wanted a receipted copy of that property tax. So don't try to shortcut the system. If you hear that they're a renter owner, they need all the documentation for both. All right, qualification for the rebate. How's she qualify for the rebate? 65 and older. And we don't know about the spouse, so we're going to save at this point. And total amount of property taxes paid on the residence. What did we pay for property taxes? 1,095. Okay. Okay, now we have to do a rent certificate. So we call up the rent certificate, and if they lived at multiple places renting each time, you could have multiple rent certificates. She didn't, so we only have to fill out one rent certificate. So let's open that up. I always teach to fill out as much of this as you can. They take the form then to the landlord to have the rest of it filled out. If they come walking in with a rent certificate, get up and give them a hug, because that makes your job extremely easy. All you need to do is to get the rent into the Taxlayer program. You don't have to sit there and fill out an entire rent certificate. When you get it in and it prints out, you could throw that one in the trash can and make a copy of the one they brought in with them. Now, I said a lot there. If they walk in with a rent certificate already signed by the landlord, get up and give them a hug, because that has made your job much easier. All you need to do is get the rent into the rent certificate. All right, so we're going to fill out as much as we can, making it up as we go. We know where the rental was. We know the type of unit. Okay, landlord information. Who wants to be a landlord here? Steve does, okay. And most of the time, the client is going to know this information, so it's worth sitting there and putting it in. If the client says, I really don't know where the landlord lives, that's okay. Just leave it blank. They can get the landlord to fill that in when they when we print this out for them. All right, and the type of unit, she's in a trailer, so mobile home. All right, now here's our, I think, our first challenge. The rent they're looking for is the average monthly rent. If they paid $500 a month for the first 6 months and $1,000 a month for the next 6 months, what you're going to put in here is $750. It's the average of the whole year. So when they're starting to tell you that the rent changed throughout the year, you got to sit there with your calculator and add up what the total rent was for the year. Divide that number by 12, and that's what you put into this block. To explain those changing rents, you start filling out line 1, 2, etc. And those are alphanumeric. They don't have anything to do with math. Whatever you type in there, it'll print out on the form. So you can say January to June at $500 per month. And then on line 2, say July to December, $1,000 a month. And that'll print out just like that on the form. It doesn't go into any calculation. It just shows the state how the rent changed through the year. What you're putting in that top box is the average. So her total rent that she paid was $4,776. Who's got the calculator? 4,776 divided by 12. Thank you. It's right on the form, isn't it? So we're going to put 398 in there. And we don't have any information for changing rents. So now how much of it was subsidized? We don't have anything to put in there, and the number of months it was occupied was 12. And that's, yep. I've never run into it. We We had a couple women 3 years ago probably who I fully believe they were subsidized, but they refused to tell us that they were. They kept insisting they weren't. We filled out the rent certificate and sent it with them. I'll bet you that never got past the landlord. If it got past the landlord, it never got past the state because the state knows that they were subsidized. So I looked at it, it wasn't we asked the right questions. All we can take is the answers they give us. The state has the information they need to make the right decision. So I asked it many different ways and I finally said, okay, we'll fill it out. So SSI is the other challenge to get from them, that they're getting SSI and how much they get. So, but again, the state knows that, so they will correct it. All right, so we have the rent in. I don't think there's anything else to put in here. Again, line 1 through 5 are just free space. Whatever you type in there is what will print out. So we save it. And we save it. And we back out. And go ahead and keep backing out. Exit PA. And we'll print. Yeah, all we're doing is creating the PDF. We're not printing anything. We're creating the PDF to look at. All right, so there's the Pennsylvania return. And we have the income, the half of Social Security, the pension. All right. And this probably doesn't agree with you, does it? With what I have on the example. Yeah, it does. Yeah, it does. Okay, good. I was making some changes in there to show something else. I thought maybe I hadn't taken it back properly. Okay. So you can see that as a property owner, she would have got $500. As a renter, what was her income again? $83.91. So as a renter, she would have got $500. So they give you the higher of the two. In her case, it was the same for both. So she gets $500 for owner-renter rebate. Okay? All right. Lorraine, she's in an apartment. These are actual examples that we had in 2016. Lives in an apartment in a house with her sister. Both of their names are on the lease. She owns the property that the house sits on. She paid tax on the property of $70. Together, she and her sister paid $93.60 in rent. And she had a tax receipt to show that she was the owner of the land that the house sat on. So let's go into her return and get over to the PA 1000. And we're going to say yes. Okay. And we're going to, all right, and what is she then? She's an owner renter. Because of that little bit of property tax that she pays, she's an owner renter. That's not going to get her the rebate unless she's over 15,000. But if she's under 15,000, her rent rebate is going to be much higher. But she is still an owner renter in any case. What qualifies her? She's over 65. And we don't know about the husband. Okay, go on. She's not a first-time filer. Total amount of property taxes paid, I think it was $70. Okay, and then we have to do a rent certificate. She owns the land. No. She owns the land. Yeah, it was, I had to see it for myself to believe it. Which is why her tax was, that's why her property tax was only $70. No, because, no, she doesn't own the house. The house is being rented. All right, type of unit is a house. And the rent paid. So what's the calculation on the rent? $93.60 divided by 2 or by 12. 780, okay. And go on down. 12 months. All right. Go to the bottom and save that. All right. All right, now we have to do a Schedule F because there's 2 names on the lease. Yeah, I think what I'm headed to do is to split that rent with a Schedule F. I think you can do it there, and until Schedule F was working, that's where we did it. Maybe we'll go later and do a Schedule F. I think you can do a Schedule F on splitting the rent also. Yeah, an additional owner renter, yes. And the name of that other one, give her a name, Mary Smith. You rather Jane, okay. You put the address in if it's different than on the claim form, which it isn't. And she's 70 years old, and her sister. And go ahead and save. And you have to put a percentage in there. They split it 50-50. So we're going to put 50% in there. Up until Schedule F was working, I was doing just what you said. And I did that with property tax also. I would just split it in half. And Pennsylvania never came back at us as far as I know. But the Pennsylvania proper way to do it is a Schedule F. Or property tax. If 2 names are on the lease agreement, you use a Schedule F. If 2 names are on the deed and the property tax bill, you use a Schedule F to split them. And like I said, up until Schedule F was working, we were just splitting it and never filling out the schedule. Other than a spouse. Yes, other than a spouse. Yeah, good catch. Okay, let's go back and see if that worked. Yes. No, only 1 person per residence can claim property tax or rent rebate. If 2 unrelated 65-plus-year-olds are sharing a mortgage and paying taxes together, only one of them can get the property tax rebate, right? Unrelated. Okay, even if they're both living in the house. She and her sister live together on a lease. Only one of the 2. We have a couple of them that come in and, you know, 1 year one claims it, the next year the other one claims it. They alternate it back and forth. According to the Pennsylvania book, only 1 person per address. Only 1 person per house, only 1 person per apartment can claim a property tax or rent rebate. That's right. If two people split the rent 50-50, you put 50% in here.
Why would you split it? If only one person can claim, then that person claims total, what they do behind the scenes.
Well, moving right along. Right. Yeah, you got to listen to the whole situation. Let's just move along. When you're digging a hole, quit digging, right?
I had a case just like this, except what they would do, one person claimed it, she claimed all of the rent, but every other year she would give her sister the rent.
Yeah, if that's what they're telling you and that's what the landlord is filling the rent certificate out to, then you're not doing a Schedule F. But the discussion you start with is you're sharing the rent. We need to do a Schedule F.
And they said they weren't sharing the rent. One sister who was making the claim paid all the rent.
Sure.
The other sister paid all the
Yep.
utilities, payroll,
Yep.
so on.
Yep.
But they would still alternate the agreement.
Yep.
I think the other distinction would be, so my daughter lives with several roommates. All of them are on the lease, separately on the lease. Each makes payments to the landlord. So there's documentation that it's being split up. But if you had two people who were living together, and one wrote the check every single month, the other one reimbursed it for that.
Yeah, what goes on behind the scenes, we can't prove or not prove. So, yeah, let's move on. All right, let's see if our Schedule F worked as we back out of this. Did it work? All right. I'm not sure. Yeah, I'm not sure. It should have given her a $70 tax rebate, property tax rebate. Well, but we only split the rent. We didn't split. Well, did Taxlayer go back and split the property tax? I don't know. We put it in as though it was rent split. All right. So she gets $500. Yes. Well, you take 20% of the rent and compare it to what the earnings would have given you. So in rent rebate, a lot of times it trips over that when you split it, you're getting less because you're only taking 20% of the rent. Okay, the last example that I was going to go through, and in the interest of time, we may skip over that to get to some of these other things, was a mother and her son whose names are both on the deeds of the house. The mother lives in the house. The mother pays 100% of the property tax. Even though the son doesn't live in the house, even though he doesn't pay any of the property tax, Pennsylvania still wants to see a Schedule F and only gives her credit for paying half of that property tax, even though she physically paid it all. Okay? So again, in that situation that I'm describing here, you would fill out a Schedule F. You'd list the son's name, and she would get credit for paying half the property tax. even though she physically paid it all. If he lived in the house with her, it would still be that only one person can file for property tax rebate. And you would still split the property tax on a Schedule F because his name is on the tax bill, because his name is on the deed. No. Okay. I don't want to cut it off too soon, but I don't want to bore anybody either. Are we all right with PA 1000? Did you learn anything new? Good. Yep. I would go save first in my head. The only way I would go back if I opened a form that I knew I didn't want to be in, then I would go back. But if I have typed anything on that form, I would always hit save. That's been, if you've watched the Taxlayer blog of all the suggestions, there's, I don't know, 68 of them for Pennsylvania. And part of it is the logic is so different in Pennsylvania versus the federal. And people were complaining about that. I think they had like 2,000 suggestions in the federal side of Taxlayer. Half of them dealing with things that are done wrong and the other half dealing with things that are not nice to work. All right, another question.
The only time you have to split the rent is if those names are on the lease, is that correct?
That's right. Yep. And most of the landlords are savvy enough to catch that. Yep. Some landlords will work with the client and you end up with one name on the rent certificate. All right. How about a 2-minute stand up, turn around and sit down?